Hello, everyone. Welcome. I am so honored and happy to be here to share with you all today. We are going to talk about a super exciting topic, taxes, right? Maybe not so much exciting to everyone, but I promise you that I will try to make it as bearable as possible. If at any time you're unable to see my screen, do please let me know. We have a little bit of a difference. I have a little bit of a different situation going on. Um, okay. So, welcome to the first webinar in our series. I'm extremely honored and happy to be here with you all this evening. This is the first webinar in our three-part series where we are going to be talking about getting ready for tax season. And we're going to cover a lot of information. I understand that taxes can be overwhelming and maybe a little bit stressful, especially this year. But I want to tell you that I'm going to give you everything and even some cool resources that will help you. I know some of you, my heart, my thoughts, my prayers are with you, are experiencing a tremendous amount of tragedy right now. And I want to assure you that tax is going to be okay. So I'm going to give you some tips to tell you some things you can do going forward, as well as I'm going to tell you what you can do if you are one of the people that happen to have lost all of your documents. So it's going to be okay. So let me ask you, on a scale from 1 to 10, how nervous are you about the upcoming tax season? So let me know, think about it within yourself. And I want you to rate that because I'm going to ask you that a few more times over our time together. And I'm hoping that if you started at a 10, I'm hoping that we can get that number all the way down to 1. And I see Crystal is at a 10. Crystal, I want you to check back in with me at the end. I'm going to remember your name and I want you to tell me if you are still feeling that way. Now, I'm here to help you. And in order for me to do that, I will greatly appreciate some help for you. So, at any time, if I'm speaking too fast or if you don't understand anything that I'm saying, do please let us know so that I can adjust accordingly. And be sure that when you post your responses that you follow all of the instructions that the awesome language justice team has provided us with. So, okay, so that is not applicable today. So welcome again. My name is Shanita Jones. I'm also known as the Child Care CPA. I'm the founder of Jones Taxes and Financial Services and the Child Care CPA division of our firm, where we specialize in working with child care providers just like you. I'm a certified public accountant, and we've been specializing in working with the child care industry for over 10 years. We help child care providers with their tax preparation, with their tax strategy and planning to lower their taxes. And we also do bookkeeping, accounting, profitability, and growth for those looking to expand. I'm the author of the Child Care CPA 7-Point Profit System / Taxes and Accelerate Growth. I'm also the founder of the Child Care Accounting and Business Academy, where we teach child care business owners bookkeeping and accounting principles to educate, impact, and empower you so that you can continue to change the world one child at a time. So I'm going to switch my camera. You all let me know if this um, disturbs you at all, and I'll switch it back if I need to. Okay. So this might be a little bit better. So, um, but why? People always ask me, why childcare? Of all of the different business industries you could work with, why childcare? And I want to share my why with you because when I finish the story, I hope that it will help you to understand a little bit better about who I am and what qualifies me to help you tonight and why I do what I do, why my team do what we do. So, do you mind if I share with you all a little bit more about the journey of how I became the child care CPA? So, it all started 40 something years ago. Don't worry, I'm not going to bore you with my whole backstory. But my aunt was my first educator. She dreamt of having her own daycare, and me being only 10 years younger than her, I naturally was her first student. My aunt was amazing. She taught me to read. And back in the 80s, when I went to school, teachers didn't like kindergartners coming in already knowing how to read because, well, we would misbehave because we were bored. So she taught me how to read. And I never imagined that I would in turn end up teaching her one day. But my aunt didn't just teach me how to read, she taught me how to learn. I was her star student. She did eventually go on to open her own family childcare, and she ran that for over 20 years before she added an additional location outside of her home. While my aunt was growing her childcare business, I was growing up. And despite all of the lessons she instilled within me, by the time I got to my senior year in high school, I decided to stop school and become a mom. Auntie was not pleased, but she continued to push me to go back to school, and I did. I got my associates, my bachelor's, my master's, and I went on to get my CPA license. And that baby I had in 12th grade, she's a nurse today. I honestly believe that all of this was possible because God entrusted my aunt with my early childhood education. So, can you imagine my displeasure when I learned that my aunt, who helped me so much, found herself in tax trouble? It turned out that she and some of her childcare colleagues had all gone to the same tax professional, and it landed them in big tax trouble. I was working as a corporate accountant for the University of Pennsylvania, and I had a tax business that I ran on the side, so she naturally called me for help. I didn't know anything about business taxes, and I definitely didn't know anything about childcare taxes. So I began to call my mentors and my colleagues to see if anyone could help her. Call after call, I received rejection after rejection. These tax people and accounting people would listen to my aunt's story, and they treated her as if she was less than because they didn't see her business as a real business because she ran it in her home. She was providing a home away from home and educating the families, the children of the family she took care of. She was essential before the term even became a thing. And it was also essential that we got her the help she needed and kept her out of jail so that she could continue to do the important work she was doing. I finally stopped asking why no one would help her and decided to help her myself. So I poured through the IRS Technique Audit Guide for Daycares. That's exactly what it's called. And I'm saying IRS Audit Technique Guide for Daycare. We managed to get her out of trouble and we got her back on track. She told a friend told a friend, and it wasn't long before I became known as the child care CPA. I share that story with you to tell you that I understand the importance of the work you do. You are responsible for our future teachers, lawmakers, lawyers, doctors, and accountants. And in order for you to continue to do the work that you do, your business needs to remain viable and also compliant with tax regulations. So during our time together, I want you to feel comfortable asking your questions. There are no stupid questions. Sharing your feedback and understanding that this is a safe place and I'm here to help you because I never want to see another early childhood educator go through what my aunt and her friends went through. So I'm going to give you the tools and information you need to have a successful tax season this season and for those to come. So this week, we'll be starting with our first part in the series, and that is preparing for tax season and essential documentation. So let's get started by defining exactly what we're going to cover and how that's going to help you. Number one, we're going to talk about why preparing early matters. And I understand that preparing early is going to mean something really different this year for a lot of us. We're going to talk about how to prepare early so you aren't scrambling at the last minute, feeling overwhelmed and frustrated. And let me know, or if you can in the comments, let me know if you are a person that no longer has access to all of your documents. And if not, I may be able to give Stacy more resources later, but I definitely want to help you. We're going to talk about key deadlines and IRS rules that you need to know. I'll walk you through the key tax deadlines and what the IRS expects from childcare providers. Knowing this can make tax season so much easier. I'm going to go over what documents you actually need. So we'll talk about that in great detail. I'll list them all out for you. I'm going to tell you how to organize your documents without feeling overwhelmed. We're going to talk about ways to do that both with physical documents as well as with digital documents. Then I'm going to go over some common tax terms that you may have heard for years and may not understand or may not fully understand, and also some terms that would just be useful for you to know. I'm going to show you how to set up some systems that'll work for you. We'll talk about some mistakes that we commonly see when working with not even just childcare business owners, but business owners in general and how you can avoid those. And then there will be plenty of time for you to ask your questions. And you can also place your questions in the comment box as we go along to be sure that none get missed. So, a little bit of legal talk. Please note that the opinions expressed in this presentation are solely those of my own. Nothing you hear or see in this presentation or in the recording or any materials provided should be construed as tax advice specific to your situation. For tax advice specific to your situation, you should contact your tax professional. We are accepting new clients. At no time will we ever offer legal advice or services. For legal advice and services, you should contact an attorney at law who is licensed in your state. So, a lot of people dread tax season. I understand why. It can be scary and it can be nerve-wracking. But I want you to know what I find even more nerve-wracking than preparing for taxes is watching hardworking, honest Americans overpay on their taxes simply because of what they don't know. More specifically, it saddens me to watch hard-working child care providers pay the IRS and not be able to get any deductions or credits for it. And that's exactly what happens when you file your return late. When you file your return late, you get hit with penalties, interest, and fines, and you can't deduct those. Now, if you are in the state of California, specifically in LA County right now, the IRS has granted an extension until October 15th. I suspect that that extension is going to be extended even further. So I know how it is running a childcare business. The state will come in and disrupt your day. Someone calls out, a child gets sick, parents have issues, and the next thing you know, the intentions you had to get ready have to take a back burner. The administrative tasks that you had planned to do fall to the wayside because you still have to do curriculum planning, meal prep, sanitizing, continuing education, and all sorts of other urgent things that you need to attend to. And before you know, you look up and the tax deadline has come and you aren't ready. Can anyone relate to this story? Has that happened to anyone here before? So I've seen it time and time again. And we're going to break that cycle today. I'm going to show you how to be ready so you don't have to get ready. And this is really important that you're able to prepare early. Now, you might be a little bit behind for a lot of time. And then you can also use what you learned today for years to come. Did you know that if you don't file your return by the deadline, they have a penalty called a failure to file penalty? So even if the deadline is April 15th and you have an extension until October the 15th, and then you turn around and you file on November the 1st, you are now subject to a failure to file penalty, even if you file after the fact. And that penalty is 5% of the taxes you owe. And this can go all the way up to 25%. So, and then they charge you interest on top of that. So this can rack up to be a lot of money really quickly. And we don't want that. And the tax deadline under normal circumstances, if you are an individual or your business is a corporation, is normally April 15th. If you have an extension to file, it's October the 15th. You cannot extend an extension in normal circumstances, but those affected by LA, I believe that they're going to announce, it hasn't been announced yet, but I believe your first deadline will now be October 15th, and then they'll give you another extension. More information probably will come through during our time together. And as I receive updates, you will receive those updates. So you can extend an extension. We get asked that a lot. Once you're late, you're late. Even if you have an extension, the IRS expects you to pay your taxes due by the due date. Now, does that make sense? If you haven't filed your taxes yet, the IRS, I see Miss Shelley is like, no, ma'am, it doesn't make sense, right? It really doesn't. How can you make a payment if you don't know what to pay? Well, we're going to talk about that as well. And I want to tell you, even if you don't have the money to pay, it is still best to file and not pay rather than to not file and not pay because now you have additional penalties. So, is anyone here filing their business as a partnership or an S corporation? If this is you, please listen up. If you file as a partnership or an S corporation, your return is due March 15th. Your 6-month extension to file takes you through to September the 15th. That means your return has to be done by this day. And I'm going to say this a couple of times, but if you have a partnership or an S corporation, that return absolutely must be filed before you can file your personal return. And yes, I see your question when we talk about an extension. That means you can request an extension to get more time to file your return. So if the normal date is April 15th, your extension will give you 6 months and take you out until October. And usually we have some nonprofit folks. If you have a nonprofit, if you're a nonprofit leader, your due date for your filing is the 15th date of the 5th month after your organization's fiscal year ends. I know that sounds super complicated, and that's because nonprofits often file on a year that's different than a calendar year. So if you don't file an extension, you will be penalized. You'll get that failure to file penalty. And please, as a reminder, please direct your questions to the host because I don't want to miss your questions. If you send them to me directly, it's a strong possibility I will miss it. So, in addition to facing penalties and fines for filing late, you also run the risk of not having tax returns. And sometimes you need these returns to file for mortgages, to apply for other loans. Some grant programs require you to show your tax return. If you or your spouse or one of your dependents are in college and need to do financial aid FAFSA forms, this can get in the way of that. So, not being current with your tax filings can have a lot of implications that reach far beyond upsetting the IRS. Now, if you don't owe money and you're late filing your return, there is no penalty. But some people don't know they don't owe if they don't file or prepare their taxes or have their taxes prepared. I am not trying to scare anyone, but I want to emphasize the importance of timely filing and some of the ramifications you can face by not doing so. But it wouldn't be fair for me to just tell you doom and gloom, right? It wouldn't be fair for me to just tell you all the bad things and not give you hope and direction. So the rest of this training will be more positive and more filled with that. So to summarize, all that I've said so far is very important to file on time. If you can't file on time, file an extension. If you have an extension, you need to file by that date that your return is due. And if you absolutely aren't ready, you can file with the best information you have, and you can always amend to fix it later. So, are there any questions before we go to the next portion? You can drop them in, and I will catch them while we're on topic. So, what documents do you actually need? How many times have you shown up to get your taxes done or sat down to do your own taxes and thought you had everything and then discovered that you didn't have everything? Or wondered if you could use something and you heard you could or thought you might be able to and you weren't sure? Well, now we're going to talk about what exactly you need. And I am going to be primarily speaking to you about what you need to be audit ready. So, a lot of people, you'll see a lot of tax people talk about being audit proof. There's no such thing as being audit proof because audits can be random. You can be audited for no reason at all. But in the event that you are audited for a reason or without reason, you want to be ready. So, how can you be audit ready? So, if you're ever audited for your return, there's some documentation you'll be asked for. Sometimes you'll be audited and they'll give it a nice word. They'll call it an examination. It's an audit. It's just a nice way of them saying it. It's lower in scope. And you'll need to have the documentation in place to defend yourself. If you have any questions, please put them in the chat box. We're not going to send them to Peggy and Hema. We're not going to be able to ask you to come off of mute today. So, you could be randomly audited, but there are some things you can do to lower your risk, and there's even more things you can do to prepare yourself. So, I hope that makes you feel better. And the key point here is that everything on your tax return should be substantiated by some sort of documentation. So, as I went through preparing for you all, I actually pulled up an IRS Form 1040. So if you have access to your 1040, you can pull it out and follow along. Or if you want to go back later and look at your 1040, or even if you want to look at your IRS Form 1040, if you want to look at a blank copy on the internet, you can, because we're going to go straight through that. And I'm going to go through this list of documents as if I was preparing your return tonight, what I would be asking you for, why I would be asking you for it. And the first thing you'll see when you look at that form at the top is they're asking for your identifying information. If you're going to a tax professional, they'll want to see your ID with your current address. Make sure when you file your returns with the IRS, you're using your current address. If you've moved and you're expecting tax forms to come in, just remember that you can change your address simply by filing your tax return with the updated address. And that'll change it in the IRS system. So even if your driver's license is expired, if you're going to a professional, they will ask you to bring them an updated copy or the camera card because that's part of their due diligence. So here's a reminder, if your identification is expired, you might want to get that renewed. Next up, if you are married, you will be asked to provide your spouse's birthday and social security number, even if you're filing separately. Oftentimes, clients want to know, why do they need to provide their spouse's information if they aren't filing together? And the reason is because the IRS wants to know, if you're filing separately, who are you filing separately from? But don't worry, if you're getting a refund, your spouse will not be entitled to your refund. And if they owe money, you won't become liable for their debt and vice versa. But because I am speaking to people in California, which is a community property state, in most cases, it makes sense to file jointly because in community property states, you still have to put all of your spouse's information in on your tax return. Whereas in other states, you just need their name, social, and birth date, and you're good to go. So, some other reasons why you might want to file jointly is because there are some deductions and credits that you cannot get if you file married filing separately. We'll be getting into deductions and credits during the second session in the series. So, are we doing okay? And I do see some questions coming to me directly. Please make sure you send them to the host so I can make sure we capture them all. I don't want to leave anybody out. So, the next area we're going to move into is one of the areas of the tax return that gets confused a lot, and that is the filing status. I see the most people audited because of their filing statuses. And for some of the filing statuses, you're going to need to provide documentation. The IRS has something called due diligence for professional preparers, which means they have to make sure that what they put on your return and they sign off on it, that is accurate to the best of their knowledge, or they can be penalized or even arrested. So if your tax person asks you for different records, it's not because they're being messy, or because they're being nosy. It's because they're doing their due diligence to prove that they're working to provide an accurate return for you. This is for their protection and yours. You wouldn't want to use an incorrect filing status and receive benefits that you're not entitled to, and then find out years later you have to pay money back along with interest, fines, and penalties. And we're going to get into the information that you can use to substantiate your filing status. But first, we're going to talk about the only five filing statuses that exist. And single head of household is not one of them. So, do you know your IRS's filing status? I want you to think about whether or not what you understand aligns with the code that I'm going to share with you. So there's only five filing statuses. The first one is easy, single. You're either married or you're not. If you were not married as of December 31st, 2024, you are single. If you're married, you're either going to be married filing jointly with your spouse, or you're going to be married filing separately. Married filing separately means that you and your spouse are going to file two separate tax returns. And again, be mindful that California is a community property state, so you would still need to include all of their information. Now, I know there is a lot of information floating around on the internet. All of it is not good. And as a result, some people are misinformed, and then they in turn misinform other people unintentionally. But I want to be clear, if you're married, you just had those two choices. There is one exception, and this relates to the third filing status, head of household. So that extension is automatic for LA County. Yes. And I am stopping what I'm saying to say that because I know how important that is. So, head of household. In order to qualify for head of household, you must be able to claim a qualifying child or a qualifying relative as a dependent. And this qualifying child has to pass a few tests in order to qualify. They have to be under 19 and younger than you and your spouse if you're joint, or younger than you and your spouse. Or if they're under 24, they must be a full-time student for at least 5 months during the year. And they also have to pass a relationship test. That means they must be your son, daughter, stepchild, adopted, or foster child. They can also be your sibling, half sibling, stepchildren, nieces, nephews, and grandchildren also meet the relationship. But notice there's no mention that if you're in a relationship with someone and you take care of their child, that that child qualifies. I see a lot of people lose audits for claiming children they're raising as their own, but they don't meet the IRS relationship test. And the reason the IRS cares so much about your relationships and your filing statuses is because this determines how much you get to write off as a standard deduction. So your standard deduction reduces how much of your income is going to be taxed. So you'll see your filing status is very important. And it's for this reason the IRS wants to make sure that we're all using proper filing statuses. So sometimes the IRS will send you a letter and ask you to prove things. They may ask you to prove the relationship of your own child. They may ask you to prove that the child lived with you. They may ask for these things because there's a big difference between being single and being able to deduct 14,600 and being head of household and being able to deduct 21,900. Now, these standard deductions are for people that do not itemize. Less and less people qualify to itemize after the 2018 Tax Cuts and Job Act because it increased our standard deduction. So if your standard deduction is higher than your itemized deductions, you are allowed to take the standard deduction because it's going to benefit you. And that's why they care if you're filing separately, because if your spouse takes the standard deduction, you have to do the same. If they itemize, you have to do the same. So we're going to talk about some documents that can be used to support your filing status. They talk about the residency test. So even if you're doing your own taxes, you want to make sure you keep this with a copy of your return because if they send you that letter and they ask for this, you want to be able to get it to them right away. Maybe your child lives with you and something happens and they ask for it next year and your child may, I hope this doesn't happen, but maybe they live with their other parent. But you want to be able to prove things at the time they happen. So the residency test is where you prove that the child lived with you for more than half of the year. Now they don't have to live with you consecutively. Maybe you have them for more nights. And then you have the support test. And the support test is where you have to be able to prove that you provided more than half of their financial support. And then there's the joint return test. And most people don't have to worry about this, but that means that your child cannot have filed jointly with a spouse of their own. And if they did, they only could have done so to get a refund or to get back taxes that they paid in. So the head of household filing status in some cases can be used by a married person. If this married person is separated from their spouse the last 6 months of the year, and if they had qualifying children living with them. So what that means, if Mary and John are married and then they break up in May and John lives with the two kids all year long and he supports them, John could be the head of household and Mary would have to be married filing separately. I hope that example makes sense. Okay. So I know that was a lot. So before we move on to the last filing status, I want to give you an opportunity, and I'm checking the question sheet. Oh, wow, we got a lot. To let me know if you have any questions. And some of them, if they are super specific, I will be able to answer them generally, and I may save them to the Q&A section, but we are collecting them. The last filing status is the qualifying surviving spouse status. And this status can be used by someone who would have been able to file a joint return with their spouse, but the spouse passed away. And if you had a spouse who died during the 2 prior years and you did not remarry before the end of the current year, that status may be good for you because you get the higher deduction as if you were married. So each filing status has its own standard deduction, and every year it gets increased for inflation, which means the government allows us to write off more and more. So you do not have to do anything to claim the standard deduction. It's automatic if you don't have itemized deductions, and we will talk about itemized deductions. So it's pretty much, you can think of it as a default. Okay. So I will answer a couple of these questions that I see randomly. So someone asks, if you don't file taxes for last year, can you be forgiven for the new year? That is so, the government does not like us that much. We do not get forgiven, but you can still file. You have to file any unfiled taxes. You won't be forgiven. Again, if you don't owe, you won't be penalized, but you have to file it. And you want to file any back due returns in consecutive order. Um, if you were divorced and taking care of a family, you were unmarried. So if you're unmarried, we start there, and then you would look to see if you qualify to be head of a household. Someone has a niece that has been living with them for 7 months and they're the legal guardian and they're in school, it sounds like you may qualify for head of household. And I say sound like because remember, you also have to pass the support test. And oh, this is a good one. If an audit is conducted, they they typically will go back 3 years. They can go back 7. If they determine that there's fraud, they can go back as far as they want to go. You do not have to be an LLC to file taxes for daycare, and in California, LLCs are tricky because California has a tax on LLCs. So before you change your structure and things, you want to make sure for your situation that it makes sense. I believe it's $800 unless it went up in 2024 that I haven't seen yet. So before you form an LLC in California, you really want to sit down with your tax person, think about where you are what your goals are, what your plans are, what your risk tolerance is before you become an LLC in California. And yes, retirement income would be included on your personal tax return because you are filing a personal tax return. You will be getting a copy of the recording. And I think I took care of all of the questions that I have up to date. Go me. You guys are awesome. And if you are divorced in 2025, it goes by the last date of the year that you're filing for. And yes, I have heard of Mr. Tom Copeland. I call him the Godfather of daycare. I think he's great. He's an attorney. I'm an accountant. We don't always see eye to eye, but I have a great deal of respect and admiration for the man. Okay. So while we're talking about document collection and making sure we have everything we need in order, it's important that you understand why you're being asked for some of the documents you're being asked for. How many of you all file your own taxes online? So, even if you do your own taxes online, you should still make sure you have these documents handy. Pretend as if you're giving them to the IRS today and keep them for 7 years, just in case you're ever audited or your return is examined. And it's a really good idea to keep this stuff electronically. Google Cloud is free. Most of us have a Gmail account. If you don't, you might want to get one. But they give you free storage and they give you a lot of storage for free. You can scan those babies in, whatever your documents are, and you can save them. And if you're using Apple devices, I know Siri in her cloud has a whole bunch of storage capabilities as well. So it's a good practice to make copies and make sure you keep especially that proof of relationship and residency, especially if the child you're claiming is not your own child. In the event this happens, you'll have everything you need and ready to go. And trust me, IRS notices are scary and stressful enough to worry about without having to worry about finding documents. And whenever the IRS asks you for something, there is always a deadline. So if you get any mail from the IRS, please make sure you respond. Even if it's to ask for more time, they will often give you more time. So, are you all ready to talk about some more of the documents that you need to have handy? And please let me know, Peggy, if my pace is okay. So, I'm going to start out at the top level and speak generally, and then we'll break it down and get a little bit deeper into the weeds. So, I see some of you are taking notepads and have your pens and papers ready. I'm happy to see that. I will be giving you a copy of a checklist that you'll be able to print out, or you can use it electronically, and you'll be able to actually tick off, and indicate if you need something, and if so, you can put the date when you have it. Okay. So, and also this is being recorded, so you'll have everything. So we're going to go through a whole bunch of documents. Now, I know a lot of people are eager to file their returns if they're getting a refund because they want their money. And some people are eager to file if they believe they owe because they want to know how much they owe. But I want to caution you to be careful not to file your return too early. The IRS opens for 1040 people if you're filing as a sole proprietor. Your return can be filed as early as January 27th. And if your business is a corporation or a partnership or an S corporation, or C corporation, your return can be filed January 15th. But you want to make sure you have everything because if you miss something, you may have to file an amended return. Amended returns can be complicated to do if you do your own return. And if you pay someone to do your return, you may end up having to turn around and pay them to do your return again if you amend it. And if you don't catch it in time and the IRS catches it first, they could assess penalties for filing an incomplete return. And we don't want that. If you do find yourself having to file an amended return for the current year or maybe a prior year, you have to wait until the first version that you filed is completely processed by the IRS before you can actually file your amended return. So if you're getting a refund, you have to collect that money first before you can file that amendment. So I want you to be sure that you take note of everything that you may have. And I strongly suggest you go look at your last filed tax return and look at the lines that have numbers on them because chances are you're going to have these same things again. So your documents are only going to fall into 9 categories. You're going to have income forms like W-2s, 1099s, retirements, Social Security, food program stuff. You'll have deduction and credit forms, your business income and expenses. We're going to talk a lot about these. You're going to have your prior tax return. You should always start doing your new year by looking at your last return, and most professionals will ask for the last 1 to 3 years. You'll have informational returns if you contributed to an HSA or if you contributed to an IRA. Some or even your health insurance may send you an informational form. If you have employees, you'll have employer forms like your W-3s. When you pay your employees, that's the sum of all your W-2s. And your business structure documents, this will include your EIN letters, your state formation letters. If you change to be taxed as a corporation, the IRS will mail you a letter telling you that it's been approved and the approval date. You'll have depreciation records and assets for things that get written off over time. And then I always throw miscellaneous in here because there's always something else that comes up. If it's a tax form, you want to put it all with your tax documents. And I listed out these forms if you want to take a screenshot of this. I know sometimes people like to do that, but you will get a copy of it so you don't have to. So, in going through the 1040, looking at it section by section, it will help you to understand the forms that you need. And I know a lot of people are not fans of numbers, and we covered a lot of ground, and we haven't even gotten into any real numbers yet. But in the next section, we will be getting into numbers, and we're going to go slow as we get into it. So it's a good idea for you to take notes, even if you're taking notes about questions. Does this apply to me? Because we will be going over these common documents. Everyone's situation is different. So there's probably things on my screen that does not apply to you, and that's okay. But you want to make sure you have all of your stuff together before you file to save yourself some headache. So I'm not going to go through what all of these forms are, but if you do have questions about them, I'll tell you. Most of you will recognize these forms. These are primarily income forms. And as these documents come in, here's my trick. Get a manila folder, and as these documents come in, stash them in your manila folder. And then I suggest that you never, ever, ever give your original documents to anyone, not even your tax professional. A good friend of mine, another CPA, she works for a CPA firm down in Florida, and Hurricane Michael several years ago, I think it was 2018 or 19, she lost her home, the office, everything was destroyed, and all of her clients' documents were destroyed with it. So I encourage you, and also in light of what we see our poor Californians going through, never give anyone your originals. And I suggest you also scan them in. So you should have a physical copy, a physical folder, and an electronic folder. And please open all of your documents as soon as you receive them and look at them for accuracy. You don't want to wait until you're doing your return and then you discover that you owe a whole bunch more money than you should because someone fat fingered a number or someone made a mistake and put more income against you than you actually received. We see this all the time. So you want to open these forms. Don't just give them, don't just say, oh, tax form, throw it in the pile, give it to my accountant. You want to actually open it and look at it. And if you don't understand the form, and that's why you aren't opening it, you should jot your questions down and ask them. Lastly, even though I know I'll say this again, make sure that you really see that every form you have, you want to know, where is this on my return? If you have several 1099s, you should see that they add up to a number, and that total number should be somewhere on your return. You are not offending your tax person if you're asking, where do I see my number? How do I know this was reported? Sometimes they'll tell you, oh, it's not on your return in the case of itemized deductions if your standard deduction is higher, but at least you'll know. So here's some tips that I give out for keeping your documents safe. Store them together as they come in. Scan them. I love Google Cloud for scanning my own stuff. You can even take a picture with a cell phone and upload it. So you don't have to go out and buy fancy scanners. I know that Apple cell phones, they actually have a nice scanner built into them. Always retain your original documents. Open your forms. Make sure your social is correct, or your EIN, or if you're a corporation and your tax form should be in your company's name, it's a good time to go back to them and let them know the form is incorrect so they can reissue it. You may have to give them a new W-9. Submit your documents to your tax professional all at once. Or if you're doing your own return, I encourage you to wait until you have everything so that you don't risk missing something by piecemealing and doing one at a time. And then make sure you're able to see where all of your documents and all of your forms are on your tax return. So now we're going to talk about some tax credits. I see a question. Someone's asking which is better to run a childcare. I'm assuming you're asking which tax structure is better, and that depends. I actually do a training on it. I haven't done it in a while, but it really depends on your individual situation. Which form is going to be better, which form is going to be better for you. What are the deductibles available if you provide service in home? We're going to talk about that. Family provider, almost everything is going to be deductible, almost everything. Um, so we're going to talk about the deductions in our next section, but right now we're going to talk about credits. So remember, deductions, they help you reduce the amount of income you pay tax on. So making a $10,000 business purchase is not going to save you $10,000 in tax. So sometimes we'll do people's taxes, and let's say they owe 10,000. And I'll say, Miss Smith, you owe $10,000. And then she'll come back and say, oh, I have this $8,000 in expenses I forgot to give you. Bad Miss Smith, because she should have gave it to me all at once, right? Almost missed it. And then I'll say, okay, your tax bill went down $1,600. And she'll be confused. And that's because deductions don't lower your taxes dollar for dollar. Rather, it reduces your taxes based on the tax bracket you're in. So if you're in a 20% tax bracket and you spend $10,000, it's only going to help you save $2,000, which is 20% of $10,000. But tax credits, on the other hand, tax credits reduce the amount of money you owe in tax dollar for dollar. Some credits are refundable, which means once those tax credits cover all of the tax you owe, you can get the rest of the money refunded to you. And other tax credits are not refundable, meaning they can only take your tax bill down to zero and you don't get the rest. So for these credits, I'm going to tell you that the most common credits that are available to you and the documentation you want to have to make sure you can take advantage of them and that you can defend yourself if the IRS questions you about them. Much of the documentation that you're going to need to have does not need to be submitted to the IRS. But you'll want to make sure you have it, and you may need it for a tax professional that's doing their due diligence. If you're doing your own taxes, I encourage you to treat yourself as if you're a tax professional by keeping all these documents just in case you're ever audited and have to back anything up. So, good question. Some credits that you might be able to claim. So, if your child goes to another program, a lot of providers don't like their children to go to their own program. You can get a credit for sending your child to childcare. If you send your child to a different summer camp, you can get a credit for that. It's called the Child Independent Care Benefit Credit. Now, if your child is in your own program, you cannot get a credit for that. If you're paying tuition for private school for your child, that does not qualify for a credit, unfortunately. If you or your spouse or one of your dependents attended college or trade school, you want to keep track of those tuition, fees, and course materials because you could possibly qualify for an education credit. Someone asked the credit earlier about retirement, but if you're contributing to your retirement, you could potentially get a credit for this. Notice I'm saying things like potentially and maybe because a lot of these things are going to depend on your total family income. So everyone that contributes to retirement doesn't necessarily, unfortunately, qualify for credit. Then we have probably the most popular credit, the Earned Income Tax Credit. And to qualify for this credit, you must have income from employment or self-employment. You have to be a U.S. citizen or resident alien for the entire year. You have to have a valid Social Security number for yourself, your spouse, and any qualifying children. This part of it, you cannot have more than $11,000 in investment income. And for the Earned Income Credit, often coined as EIC, you must be able to prove or have proof that you provided over half of the support for those you are claiming. So you don't need to give it to the government with your tax return, but you need to have it. And that is one of the most heavily audited credits. There's also the residential clean energy credit. And in order to qualify for this credit, a lot of childcare providers just make it, and some of them don't, because you cannot use your house for more than 20% business to get this credit. And this credit covers things like solar panels, electric panels, solar water heaters, wind turbines, geothermal heat pumps, fuel cells, all kind of techie things like that. But you need to keep your receipts, your manufacturer certifications, any contracts, as well as proof of installation and use of the equipment. And then we have our beloved child tax credit and additional child tax credit. To claim this credit, you'll need to make sure that you have this dependent's birth certificate. You might need to make sure you have marriage certificates to prove that the child is the relationship you say they are. And you must have earned income to claim this credit. You will not need to provide documentation while you're filing, but if you're working with a tax professional, they will ask you to prove that the child lived with you. And that could be something as simple as a shot record, if it's a baptismal record or a tribal record. And another credit that you could qualify for if you have employees, that's very common in the childcare space, is the work opportunity tax credit. If you are hiring people in certain targeted categories, these will be our people that were on government assistance. These will be people that are former veterans and sometimes people that were released from prison. But depending on what the background checks allow people to be for that one, might those groups of people may not qualify in some states. In some states they can, depending on what the person went to jail for. Now, let's see. Did I have any more? Oh, yes, we do. Okay. So, in order to claim the education credit, yes, the person should be a dependent. Food program income sometimes is taxable, usually is not. It becomes taxable if you receive more income from the food program than you spend on food program for the children. Personal loans do not need to be reported to the IRS. And ladies and gentlemen, please do not count loans as income. Every year I catch some of our accounting clients, people that come to us as new accounting clients, they are recording their loan money when it's received into their business as income. You do not pay tax on loans because you have to pay that money back. But if you borrow loan money, the interest that you pay is deductible. If you own a child care and work at home for another employment, I'm assuming you're a W-2 for the other employer. You can't write off anything. The Tax Cuts and Job Act took away the ability for W-2 employees to write off things at home. Um, Forms for an assistant should usually be a W-2 worker. In that case, I know sometimes there are some people that have persons working in their businesses as contractors, and then in that case, they would get a 1099. But in all of the audit cases I've been a part of, assistants have always been deemed to be employees. Paying a daughter in cash or a daughter or a son in cash. You should report what you paid them. How you do it is going to depend on what your business situation is. I'm going to assume that you're a sole proprietor. And as long as that child doesn't make $14,600, they won't have a federal filing requirement. Um, I'll come back to the court order things that gets a little bit more specific, and I wouldn't want to misadvise you. If this is your first year doing taxes, you are absolutely in the right place. First year doing taxes for childcare. The checklist is going to tell you everything that you need to get ready. And yes, hours like this. Now, someone's skipping ahead, but I'm going to go ahead and tell you hours for training such as these do count towards your time space ratio. Anything that you are doing working on your business is going to count towards your time space ratio. Okay. So I'm going to move on. And didn't mean to move on that fast. So I'm going to move on and we are going to talk about tax deductions. Now, these aren't the business deductions. These credits and deductions we're talking about today, these are the general credits and deductions that all taxpayers could qualify for, whether you own a business or not. And yes, you have a business, and there will be deductions and credits specific to your business. And we're going to talk about that. But right now, I want to make sure you are getting what I call the foundational deductions and credits because so many people miss out on that. So I hope that's okay with everyone. We're going to talk about medical expenses. To claim medical deductions on your return, you will need to maintain your documentation and some of the documentation will need to be submitted with your return, and other parts aren't. And you're going to want to keep all of this for 7 years. If you have medical expenses, you want to make sure they're totaled up. Over the counter medicines do not count, but your copays, your premiums for self employed health insurance, if you are receiving your health insurance through the marketplace, maybe you're calling it Obamacare or affordable health care, whatever you're calling it, you are going to get a form 1095A like Apple, and this form must be submitted with your return or it will hold you up. If you receive health insurance through the marketplace, know that that 1095A is going to cause you to file a form 8962. And I do not like to get super technical with people, but that form has to be included with your return or it's going to be sent back. And it can also cause the amount of your refund to change. I've seen people go from getting refunds to once that form gets required, they end up owing and they've already spent the money thinking that they had money come in. So the next thing you want to get together is any estimated tax payments that you made for the current year. Now, please listen closely. I'm even going to slow down. We are not talking about taxes you paid in 2024 for a prior year. I'm talking specifically about taxes you paid in 2024 in anticipation of your 2024 balance being due. You want to get a printout from your state website if you paid taxes to the state, estimated taxes to the state, and a printout from the IRS's website if you made estimated payments to them. And the reason I'm telling you to get this printout is because sometimes your tax payments don't get applied the way you think they did. And if you put on your return, we just had this with a client. He thought he made $20,000 in estimated tax payments for 2023, but that $20,000 actually went towards his 2022. So his 2023 balance owed grew by $20,000. And then he got a nice love letter from the IRS saying that you gave bad information on your return. Had he went to the IRS website and gotten that printout, he would have seen how his taxes were applied. And as a business owner, everyone should have an IRS business tax, IRS tax account so that you can see what's being reported, what your balance owed. It might take you a while to set it up. They'll ask for a picture of yourself and a picture of your driver's license. It's easy to set up from a cell phone, but I encourage you to do that. So, emergency visits, premiums, medicines, and co-payments are fully deductible for medical. Um, in order for your kid, there is no required age, but it has to make sense. The kid has to be able to actually do some sort of job to be able to pay them. You will be getting credit for tonight's training, and we will talk about time space ratio tomorrow. Um, oh, how can I do it so that when I retire, I have a good amount of money? I talk about that on another training on my child care tax savings masterclass, where I teach you how to save money and build wealth. I'll get you the link. I'll get you all the link to that because it depends. That's a loaded question. So, the food program. What I was saying about the food program and with in any grant, really, if you are given a certain amount of money to do, let's say they give you $5,000 to buy food and you spend $5,000 to buy food, there's zero left over. But if they give you $5,000 to buy food and you spend $1,000 to buy food, well, now you have $4,000 of a come up, if you will. And usually, if you're using the per diem rate, which I don't, it's not my preference to use the per diem rate because you usually get more if you use what you actually spend. And if you're using a per diem rate, that usually doesn't come in to be as much as you actually spend. A lot of people will use the per diem rate because it's easier, but usually you make out better using what you're actually spending in most cases. So, grant money. Grant money, again, if you are given more money than you spend on your program, you've just made a profit and you will pay tax on it. Grant money is taxable. That's why they made such a big deal about it when COVID happened a few years ago and the EIDL grants weren't taxable. Now, I think California might possibly have some of the wildfires. Don't quote me on that, but just looking at what I've seen in the past with other states and other natural desires, rather, there might be. You can get a printout from your state by calling them, or you may be able to get a printout by creating an account with your state. But it's usually easiest to call them and they'll tell you the best way to do it for them. So someone was told that they can only claim their medical expenses if they own a home. What you were told was, and they didn't explain this to you clearly, what you were told is that you can't claim your medical expenses because you don't qualify to itemize your deductions. And with medical expenses, you only can deduct them, it only benefits you once they are greater than 7.5% of your adjusted gross income. So if 7.5 of your adjusted gross income is 7.5% of your adjusted gross income is $10,000. If you spent $9,000 on medical expenses, you won't get any credit for that. Please put the questions to Peggy or Hema, and my Spanish is bad, so I'm not gonna attempt to answer that. Um, so charitable donations. The same thing with charitable donations. If you've donated to charity or religious organizations or any organization that is an approved IRS 501(c)(3), and you itemize, you might be able to take a deduction for that, but you're only going to be able to get that deduction if you are itemizing your deductions. Because if your standard deduction is higher, they're not going to have you itemize and then end up getting a lesser benefit because you did a good thing. And something else I want to mention about charitable donations, if you were given to someone and you're helping someone out of the kindness of your heart and you're being charitable, like let's say it's a family in your community or a family in your program, if they are not an IRS approved charitable organization, that does not qualify as a charitable donation deduction for your taxes. So, um, unfortunately, I don't know tax preparers specifically in your area, but most preparers, especially after COVID, most of us do serve people in all 50 states remotely. You can look on the IRS website and put your zip code in, and you can find someone in your area. Whether or not you can deduct your medical insurance, I see someone pays a great bit per month, is all going to depend. Oh no, as a self-employed person, your premiums for your health insurance are deductible elsewhere on the return. They are not counted as part of the itemized deductions. So that's a little bit different. Okay. So, believe it or not, we have already gone through the first two pages of your tax return of the things you'll need. And now we're going to talk about Schedule A for itemized deductions. And once we go through itemized deductions, you'll get a pretty good idea of where your standard deductions or itemized deductions are higher. Either way, especially if you're doing your own taxes, I suggest you put it all in, even if you think you can't itemize, because sometimes things will benefit you on the state side where they might not have necessarily benefited you on the federal side. So medical and dental expenses, as I mentioned, they're tricky because of that 7.5% limitation. Next up, state and local taxes. If you paid income taxes for your state during the year, these can be deducted. We most commonly see these from people who are W-2 employees, whether it's from their company or if they have another job as well. For taxes paid, you can also deduct your real estate taxes. You may have paid real estate taxes during the year, so I want you to be sure you have this documentation. And because your business, if you're a family provider, I believe we're all family providers here, a portion of this will also be deducted on your business use of home. So you might not qualify because you'll get a bigger bang for your buck because you are a business owner. Interest. If you pay interest on a mortgage for your home or a second home, it's deducted. You'll find this on a 1098 form, usually at the end of the year. If they didn't mail you one, you probably can log on to your mortgage company and get it. If you took out a HELOC, a home equity loan to build out your program, that deduction is a business deduction. Make sure that goes with your business stuff and not with your itemized deduction stuff. You'll get a bigger bang for your return. So, how many of you all have started gathering documentation already? Have you? I do want to make a note about these charitable donations. Every year, people show up and they give me all of these goodwill receipts that they've contributed clothes and vehicles, equipment, and furniture. If these forms do not have amounts on them, your tax person cannot make up an amount for you. You have to tell them how much was the item worth when you acquired it, how much was it worth when you donated it, and how did you arrive at that number. That's going to determine how much you get to write off. But you can't tell them how many you can't tell your preparer to just use the same as last year or give me the max, because they're not allowed to make up numbers on your return. So if you've been doing this, it's a strong possibility that the person just put zero because they don't know what it is. Now, death and casualty losses. If you had theft, we'll talk about theft and vandalism first. If you've experienced that, you want to be sure that you give the information to your tax professional, or you're entering it into the software, the value of the property before it was stolen or vandalized, and the value of the property after the theft or the vandalization. And if you received proceeds from the insurance company, this is going to offset it. Same thing if you lost things or were affected by the fire that's going on, or some of the previous fires. If you had a casualty loss from that, you'll need to have these values, because that is what's going to tell the IRS how much they'll give you for your theft or your casualty. So when we talk about the wildfires, that falls under the casualty loss. Tithes and offerings, they're under our charitable contributions. And again, you're going to get a benefit for it if your standard deductions are higher than your itemized deductions. Okay. So I see a lot of questions about employees or people working with you. I want to encourage everyone to look at, and I'll slip it in another presentation if there's time, but I want to encourage everyone to look at the IRS employee versus contractor laws. We cannot pay someone as a contractor because we don't want to deal with payroll. And I'm not saying you do. Your people could really qualify as contractors, but be very careful. California does not play about misclassification of employees. California and New York, they do not play. Um, so make sure you understand that. So everything that we've talked about so far is on your personal side. Most of you probably file your business returns with your personal returns, and you aren't filing a separate return. We're going to move into the specific business documentation, but I want to be sure you have all of this personal stuff. If you file as a sole proprietorship, you're going to be filing a Schedule C, like CAT. I don't know why they use a C. And that gets included with your personal return. And most family providers do file that way or start out that way. So, we are about to go for a break. I think we can start a few slides early, if they're ready. And then we're going to talk more about what you can deduct and how you'll be able to organize those documents without overwhelm.
Thank you, Shanita. Such great information. I am sitting here and my brain is going wild. So thank you so far for the information. Participants, we are going to take a 20-minute break. You can get up, go get a glass of water, do anything that you need to do for 20 minutes. We are going to have someone come in and talk about the union. Are we ready, union representatives?
Yes, we are.
Thank you, Dora. Go for it. Are we ready? If y'all are talking, we can't hear you.
¿Empiezo ya? ¿Me lleva la primera? Sí.
All right, just a second.
Thank you.
Hola, es Gemma. Creo que tienen que dejar de compartir esta pantalla para que,
Please, can you stop sharing this image so that the union can start sharing their own screen?
Permítame.
Okay, just a second.
Ya, ¿le puedo hablar?
Okay, I'm gonna
Buenas
go ahead.
noches, mi nombre es Dora
Hi, good
Seaton,
evening. My
soy
name
miembro
is
de la
Dora Seaton,
UDW
and
local
I am a member
5230 en el condado de San Diego. He sido
of the
proveedora por
union
más
in
de
San Diego.
25
I've been a
años.
provider for more than
Me
25
gustaría dar las
years,
bienvenidas
and
a
I would like
todos
to
los
welcome
representantes en este
everyone,
entrenamiento.
all of the
Sinceramente agradezco
representatives
la
to this
presencia de
training.
todos.
Thank you so much, everyone. I really
Estoy muy
appreciate
emocionada
your
por este año de
attendance. I'm so
oportunidades que
excited
nos da en
for this year of
de aprender
opportunities.
más de mejorar nuestro
We have been
negocio.
learning
Este es
more
momento para
about
hablar acerca de
how
los
to run our
éxitos, las
business, and now we want to
responsabilidades
talk
y
about
otros asuntos
successes and
importantes de la
responsibilities and other important
CCPU.
issues from CCPU.
Nuestra profesión es
Our
extremadamente
profession
valiosa en nuestra
is
sociedad, ya
extremely
que
valuable
tenemos
in
la
our
importante
society
tarea de criar y
because we
educar a
have the
nuestra
very
futura
important
generación.
task of
Sé que
raising the
comenzar el
future
proceso de cuidado
generation.
de
I
un
know that
niño y
starting this
navegar por el
process
sistema de cuidado
uh,
infantil,
and navigating
subsidio y
the
repagamento
early
de licencia
education
puede ser un poco
system
aterrador,
can be
especialmente
scary,
durante esos tiempos
especially
difíciles,
during difficult times
impredecibles,
and unprecedented times.
pero
But
no te preocupes, no
don't
estás solo.
worry,
Contamos
you should know that you're not alone.
con una sólida red de
We
apoyo en nuestro
count with a
sindicato
very
Childcare Providers
solid
Unite.
network of support
Vamos a hablar
with our
sobre
union,
de qué se trata nuestro
childcare
sindicato, qué proveedores han
support
podido
providers
ganar a través de
united,
nuestro
and we'll
sindicato, en
talk
qué
about
estamos
our
trabajando
successes, our
actualmente para
wins, and
crear un
what we're
sistema
currently working
de
on
cuidado
in order to
infantil
create a system that is world
y
class
cuáles son
for
nuestros derechos y
childcare.
responsabilidades.
And
Por lo
also
tanto,
we'll talk
espero
about
que
our rights,
vayan hoy empoderados,
and you will
emocionados y
leave
tan
this
orgullosos
training really empowered,
yo de ser
just
miembros
as
del
I
sindicato.
feel
Puedes
as a member of the
escanear el
union.
código QR que
Please
aparece
scan this QR code
en la pantalla para acceder a nuestra
that
a
you can
solicitud
see
de
on the
miembro
screen,
ahora para que pueda comenzar a
and you
completar
will be able to start filling out
completarla
the
mientras
membership
hablamos.
for the union as we speak or as I present.
Childcare Providers está formado por
Childcare providers is
40,000
part
educadores de la
of
primaria infancia en nuestro
40,000
sindicato y venimos de todos el estado de
members,
California.
and
Tomamos
we're all throughout
medidas
the state of
colectivas
California.
para mejorar la calidad de
We come from all over the state of California, and we take collective action to improve the quality
Su
of early childhood education,
asequibilidad y
its
los salarios
affordability, and the living
dignos
wages
de
and
todos los educadores
benefits
de la primaria
of
infancia.
all early
Todos venimos de
educators. We all come from different
orígenes, hablamos
backgrounds.
diferentes
We all
idiomas y
speak different
vivimos en
languages.
diferentes
We
códigos
live in different
postales.
zip codes, and we
Tenemos
have different
diferentes
license
estados de
statuses.
licencia y
And
estilos
we also have different
de
teaching
enseñanza.
styles.
CCPU
Now,
es el
CCPU
vehículo a
is the
través del cual
vehicle
nosotros
through
como
which we as
proveedoras en tres
providers
sindicatos
in three
locales
separate
separados
local
en
unions in
California
California.
y es SEIU local 521,
These are
SEIU local
SEIU Local
99 y
521,
UW
SEIU Local 99, and
local 3930,
ODUDW.
abogados
3930, where we advocate for ourselves and the families we serve as a single powerful organization. We belong to both our respective local union and to CCPU. This structure allows us to strengthen childcare systems in our cities and counties while also building a statewide organization focused on setting a clear standard for uplifting both ourselves and the families we serve. I would like to now share our vision for CCPU. And when I mean our vision, I mean the vision of not just an individual, but of the whole union, the Childcare United Union. And we need all of the children to have access to a high quality education. And as providers, we need to make sure that we're respected to have a dignified job and opportunities for professional development.
CCPU es el vehículo a través del cual
CCPU
nosotros somos proveedores
is
en
the
tres
vehicle through
sindicatos
which we
locales
are
separados en
providers in
California,
3 separate local unions in California: SEIU Local 521, SEIU Local 99, and UDW,
Abogamos por nuestras
where
mismos y
we
familias
advocate for ourselves
la misma,
and the families we serve.
a las que servimos como una sola
As a
organización poderosa,
single,
pertenecemos
powerful
tanto a nuestro
organization.
respectivo sindicato local como a CCPU. Esta estructura nos permite
This
fortalecer los
structure
sistemas de cuidado
allows us to
infantil en
strengthen
nuestras
childcare
ciudades y
systems in our
condados, al
cities and
mismo
counties
tiempo
while
que
also building a
construimos una
statewide
organización estatal
organization
enfocada en
focused on setting
establecer
a
un
clear
estándar claro para
standard for
elevarnos
uplifting
a nuestros
both
niños y a las
ourselves
familias a las que servimos.
and the families we serve.
Echa un vistazo a esta imagen del pez.
Now take a look
¿Qué
at
ves?
this image with the fish. What do you see?
Dice, ¿qué te viene a la mente cuando
What
ves
comes to
esto?
mind when you see this image?
Dice, los peces pequeños nos
The small
representa
fish
a nosotros los
represent
proveedores
us,
de cuidado
childcare
infantil.
providers.
Sin un sindicato estamos solos. Somos
Without a
un solo
union,
pez
we
pequeño
are on our
teniendo
own.
que
We're a
resolver
single
problemas
small fish
con las agencias, el
having to
Estado
sort
y
through
otros
issues with the agencies
desafíos
or
que
the state or
podemos
other
experimentar, pero
challenges
por
that we might
todos
experience.
nosotros
But with all of us
uniéndonos
coming
en
together
nuestra
in our
unión
union,
formamos
we
algo
form
más
something
grande.
greater.
Estamos
We are
unidos y
united and
somos
collectively
colectivamente capaces de
able to
actuar
take
hacia un
action
objetivo
towards
común.
a common
Somos
goal.
más fuertes
We are
juntos.
stronger together.
Tan pronto como ganamos el derecho de
As
negociación
soon
en el
as we
estado,
won the right
en
to
el estado en
negotiate with the state
2020,
back on
no perdimos el
2020,
tiempo para ayudar a los proveedores durante la
we
pandemia.
wasted no time
CCPU
to help
negoció
providers during the
múltiples
pandemic.
estipendios para
CCPU
proveedores de cuidado
negotiated multiple
infantil,
stipends for care
cuidado con
providers
niños,
with subsidized
subsidios,
children,
así como
as well as overall
estipendios
stabilization
generales de
stipends and renovation
estabilización y estipendios
stipends.
de renovación. Ganamos todos
We won all of
estos a
this
través
through
de
our
nuestra
union.
unión.
The
La
pandemic
pandemia
affected
afectó las
many
capacidades de muchos
providers'
proveedores
ability to
para
remain open.
permanecer abiertos, por lo que nos
So,
unimos para
to
ayudarnos
help
y
us stay
mantenernos
afloat,
a
we
flote.
negotiated
Negociación 16 días
16
COVID
paid
pagados.
COVID
Esto
days.
significa que si
This
algún
meant
proveedor
if any
tenía que
provider had to
cerrar
close
debido al
because of COVID-19,
19
they
tenía que
they
cerrar
would be
reembolsado.
reimbursed.
Durante la pandemia, muchos
During the
padres
pandemic,
optaron y
many
siguen
parents
optando
chose
por
and are still
mantener sus
choosing
hijos
to
en
keep
casa
their kids at home
por
for the
miedo
fear
al
of
COVID-19.
COVID-19.
Pudimos negociar
We
un
were able to
cambio
negotiate an
importante en la
important
forma en que
change to how we're being paid.
nos pagan en función de la
We get
inscripción en
paid
lugar de la
based on
asistencia.
enrollment
Esto
rather
significa que
than
si las
attendance.
familias
This means
necesitan
that if families need to
refugiarse
shelter
en el
in
hogar debido
place
al COVID-19,
because of
esto no nos
COVID-19, we
perjudica
are
y
not hurt
aún
by this
así
and
se
are
nos
still
paga en
paid
función de
based
inscripción
on our
en
program's
los programas.
enrollment rather than attendance.
En lugar de
That's union power. Now, lastly, we also created joint labor management committees with the state. These committees focus on what matters to us more, so we can continue to fight for and win on things such as retirement, healthcare, paid time off, and other ways towards improving the childcare system for all. Through the hard work of our Joint Labor Management Committee this year, we've made some wins. How do we win? Well, the future of our union and our means depend upon all of us.
Hola, mi nombre es Sandra Castillo. Soy
Hi, my name is
organizadora
Sandra
del Club
Castillo. I
RW.
am an organizer of
El sindicato de
UDW.
ustedes,
It's
juntos
your
ustedes pueden
union.
mirar las
Along with
diferentes
you,
cosas que hemos
you
logrado
can
como
take a look at
sindicato.
all the wins that we've achieved
Queremos
as a
dejar
union.
entendido
We want to let
que
you know
CCPU son
that
3 sindicatos
CCPU is
a
3
nivel
different
estatal
unions at a
y
state
que
level.
estamos peleando en la
And
actualidad
we
por el
are
tercer
currently
contrato
fighting to
que se
gain
vence
the
en
third
junio.
contract,
Así es
which
que
will expire
necesitamos
in June. So
ponernos
we
las
truly
pilas,
need to get on
ponernos
our
en
way.
marcha
We need
unidos para
to
así
be
poder lograr un
united so
otro
that we
contrato
can
mucho
achieve
mejor.
this contract, which
Así es
will
que
be much
estamos
better. So
alcanzando a personas que no
we
son
are
miembros para que
reaching
así
people who
también
are
ellos se
not
unan
members so that they
y vean
can
que hay una
join the
diferencia
union
cuando
and
estamos
see
más
the
unidos.
difference, what the
Recientemente
difference
hemos
is like when
mandado
we're all united. Recently,
encuestas para
we
saber qué son
sent
sus necesidades
surveys
para poder
to
así
know
pelear
what the
para el
needs are
próximo
so that we can
contrato.
fight
Así es que por favor
to
chequen sus
have a
correos
better and improved
electrónicos
contract. So
y
please
díganos
always check your email and
cómo
let
es
us
que
know
necesitan
through this
ustedes
survey
más ayuda.
how you need
¿Ok?
more help.
Nuevamente les pedimos acá y
Now,
recordando
I would
que
also like to ask
entre
you
más juntos, más
and
fuertes
remind you
somos.
that
Por favor,
that
nuevamente,
if
escanee el
that the
código que se
if
le
we're
pone
together we can
adjunto
be
o aquí
stronger.
en la pantalla
So please
para
scan
que así
this
pueda
QR
usted
code on the
unirse,
screen so
unirse
that
a
you
su
can join
sindicato,
the
porque el
union, join your
sindicato, como
local
los
union,
pececitos que estaban acá,
because just as
no
the
soy
image
solamente
with
yo,
the
no
fish
solamente es
is
Dora o
not
individualmente, sino que tenemos que
something
unirnos
that
para
moves
que
us
así
individually. We
el
have to
gobernador,
be
los
united
legisladores,
so
los
that
asambleístas
legislators,
puedan
assembly
ver que
members,
estamos
and
así
the
como en esta foto
governor can
unidos,
see how united
peleando
we
y
are, just as you can
luchando
see on this
para un
photo
mejor
that we're
contrato,
fighting together
beneficios
to get
para
more
todos los
benefits for
trabajadores
everyone,
de
for all
cuidado
of the
infantil.
workers, all childcare
Muy bien,
providers.
nuevamente les pido por
We're
favor,
also fighting for education opportunities.
únanse
And
al
again, I'm
sindicato.
asking you to
Este es
join the
el
union.
código de
This
QR,
is the
de
QR code
QR,
that you can
para que
scan.
ustedes
It's
se puedan
visible on the
unir
screen
a
right now
su
so that you
unión
can join the
en
union,
su
your
condado
local union,
correspondiente.
depending on the county that you live in.
También hay unas cosas que
Now,
como
there are
sindicato
some things
les pedimos
as a
que si usted
union we can
gusta
ask you.
unirse a ser partícipe de su sindicato, por
And if you
favor,
would like to join your local
nos deje
union,
saber
please let
esto,
us
¿ok?
know that you would
Tenemos
like
juntas
to do
a
that.
nivel
We normally
estatal. En
hold
este mes va a ser
meetings
muy pronto.
that
Usted
are
va a tener en
statewide,
su
and this
correo
it's coming
electrónico
up
la
this
invitación
month.
de
You'll
esto.
soon be receiving on
Participe
your
en su
email
sindicato porque es muy
calendar
importante. Si
invitation, and
tienen
we ask you to
preguntas, por
really
favor,
participate
déjenos
with your
saber.
union because it's so important
Lo
that
pueden
you're present. If you have any
escuchar o
questions,
también lo
please
pueden
let
poner
us
en el chat.
know, or you can also put
Gracias.
it in the chat.
Estamos a
Thank
sus
you so
órdenes.
much.
Nuevamente es Dora,
We are here to
corredora
serve
de
you,
cuidado infantil
and
en el
Dora
condado de
is one
San
of the
Diego.
childcare
Y su
providers
servidora
in
Sandra
San
Castillo.
Diego
Muchas gracias.
County, and Sandra Castillo. Thank you so much.
Thank you both. We greatly appreciate you taking the time to come and share some information with us. We'll be back. The break will be over at 7:55. Sandra, I sent a message directly to you from a provider. We have about 5 more minutes, and then we'll start again for the second half of the presentation.
Hello, I'm sorry. This is Sandra Castillo. I believe the question was how much were dues? And dues are 2% of the monthly wages. I believe I answer in the other computer. If you have any more questions, I'm still here to answer any questions for you.
Sandra, would you like to share the email that providers can email to you with questions?
Thank you.
And we will be resuming the webinar in about 3 minutes. Janita, are you ready to take it away?
Yes, ma'am, I am.
You,
I saw a comment. Is the whiteboard feature up? I didn't intend to use that.
it is not.
Oh, okay. No, I didn't mean to do that. If I did it, I don't know how to do that. So, so, okay, going to get back to sharing. Okay, welcome back, everyone. Now we're going to talk about something I know a lot of us have been waiting for. We are going to talk about specific deductions and documentation you'll need to take deduction on the business parts of your income. And we also have more of this coming next week. Have you ever found yourself wondering what exactly can you deduct on your tax return? Do you feel like you might be overpaying taxes because you just can't seem to put your fingers on what exactly it is that you're missing? Maybe you're even getting a refund and you're wondering if that refund should be a little bit larger. Well, I want to give you a general rule of thumb, and I want you to remember this because this is going to help you. And that general rule of thumb that I'm going to give you, it comes directly from the IRS's rule book. Are you ready? Any expense that is ordinary and necessary for you to run your business is generally deductible. So whenever you find yourself wondering if something is deductible or not, just ask yourself, is it ordinary for me to buy these cleaning supplies? Is it necessary for me to have this safety feature in my business, for example? If the answer is yes, then that expense is more likely than not to be deductible. So, okay. When you turn in all of your income and expenses to enter it into the tax software if you're doing it yourself, or if you turn in all of your income and expenses to your tax professional if you're working with someone else to do it, it's important to know that the more organized you are, the better your experience will be, and the lower the fee that a professional will charge you will usually be. In our firm, the Child Care CPA, Division of Jones Taxes, we actually use secure forms and portals to exchange information with our clients. If you're working with a professional, they should be doing the same as well. I know that technology can be frustrating at times or it can feel impersonal, but I urge you to understand that these measures are put in place to protect your documents and your confidential information and identity, to keep it from falling into unintended hands. So if you're asked to use a secure portal, I really encourage you to do it. Avoid emailing documents or other information that contains your social security number and your bank accounts. Please do not send your bank account and routing number together in an unsecured manner. To go through your business related documents, I'm going to be going through the list as if we're looking at your form Schedule C. And that form contains all of the areas of deductions that all businesses have. So even if you don't file a Schedule C, this still will be applicable to you. And I want to encourage you, don't be intimidated by the form. Take a look. You can Google IRS Schedule C, and it's available in many languages. So if you feel more comfortable reading, and maybe if English isn't your first language, they will have it available in your language. And the first thing you'll see that they'll ask for is your name, your business's name, and your EIN number and your social security number. A lot of times when you go to apply for grants and things, if they ask for your tax return and your EIN number isn't on your Schedule C, that'll become a problem for you. So make sure you're including that EIN number on there if you have one. You'll also begin to see that as your business grows, you may receive advice to change the way your business is taxed. If so, you will get a letter from the IRS saying, Miss Smith, you asked to be an S corporation or a C corporation, or if you completely just start a nonprofit, you'll get a letter confirming that. A good tax professional, a really thorough one, will ask to see these things to make sure you're filing the right form. If you misunderstand, you can file the wrong tax return. I see it at least a dozen times every year. And even if you file the wrong form on time, it's still a problem because they didn't receive the correct form when they needed it. So that's why we ask people to see letters, because we want to make sure that you're doing it right the first time. But your tax professional is not required to ask you for that. They are allowed to take your word for it. The problem is, it's confusing to a lot of people. For your business documentation, you'll want to have all of the income you received. This includes income from grants. I saw someone had a question about receiving a 1099 for computers they were given. That is because that computer that you were given it has a monetary value, and you're going to be taxed on it. It's being treated as income because you didn't have to spend your own money to buy it. Income can also include other sometimes people receive stipends for participating in different programs. You'll receive a form 1099. Sometimes it's a 1099 NEC, and I'm saying N like Nancy, E like Eric, C like Carlos. Or you'll receive a 1099G like George, but not always. Whether or not you receive a tax form for income, you are responsible for reporting all of the income, including cash, you receive on your return. 1099Ks, like Kangaroo, often come from payment processing and credit card systems. So if you're using something like Brightwell, ProCare, Playground, KidCare, or one of those apps and you accept credit cards, you're going to receive a 1099K. So make sure you don't double count this income by including it in the income you received, and then it's also included on that tax form. We catch people over-reporting their income all the time. And if you over-report your income, of course, you're going to over-report the tax you owe. And we don't want to see that happen to you. 1099 NECs, you usually see these coming from subsidy agencies, or you may even receive one from the food program. Sometimes the food program will just provide an informational document, depending on how much you receive. In any case, you want to be sure it's all reflected on your return. If you have bookkeeping or accounting in place, and if you don't, hopefully you'll get it, your income by the different streams. So all of your cash income, it may say cash income for simplicity, all of your subsidy income. And if you receive subsidy income from different agencies, you'll want to break that out. This will make it so easy for you at the end of the year to look at that 1099 and look at your bookkeeping profit and loss, and you'll be able to see if they reported the correct amount. And if they didn't, then you can question it. So we're going to get into specific deductions and expenses in the next webinar, and you'll hear me saying this multiple times, but just remember, if it's ordinary and necessary for you to run your program, it's probably deductible. And I'm also going to continuously encourage you to keep copies of your tax returns for at least 7 years. Now, in the beginning, I asked you on a scale of 1 to 10 how you were feeling. I'm wondering if you were to take your temperature again, are you feeling any better yet? Any better? Just a little bit better. And I have a reinforcement exercise for you to do. You can do this tomorrow when you get time, but do it sooner rather than later, please. Look at your last file tax return. We'll look at all of the items that have numbers on them. Every line that has a number. If you look to the left of that line on your form, you will see a description of what that number represents. Some of these lines are just totals. Add this line and that line together. Some of the forms are just numbers that the government gives you in their calculations. But I want you to become comfortable with looking at it, and then you can become comfortable with asking questions. I see someone says they feel worse because they realize they're in bad shape. You are in better shape now because when we know better, we're able to do better, right? So, don't worry, you'll be good. So I hope we're feeling good. I know this is a lot of information and we still have a lot to go. It can be overwhelming, but it doesn't have to be, because now I'm going to show you how to organize your documents without feeling overwhelmed. Okay? And you can do this whether you prefer paper copies or digital tools, but I'm going to use a biblical word. I beseech you to please incorporate digitizing your documents into your processes. It makes it a lot easier for you. So again, if you're ever audited, you will be asked for receipts. But sometimes when you get in different grants, in some states, you can't climb up in your quality ratings without having the tax returns, and they'll ask for these things. So it's super helpful for you to be able to have these items digitally to be able to share them. And documents fade. You want to protect them from the oils in your skin, air, and other substances will damage the paper that your receipts are printed on. So one trick I have is I tell people to get a Ziploc bag, a big Ziploc bag, like a gallon size. Keep one in the glove box of your vehicle and keep one in your office near your computer. Just put all your receipts in there until they pile up. And then when you get some time, and you can even have some of the after school kids do this, you can tape them to a copy paper and then you can scan them in, or you can copy them if you must have paper. And then this way, you'll be also able to write notes so that you can remember what these things were for. I am not a fan of paper records, and I think everyone should digitize. All of our clients that work with us, they are all over the country. And we even have clients in Hawaii. This would be a lot more difficult if we were dealing with paper records. Additionally, we started working with some people last year that worked with a bookkeeper that would have them send in their documents to her. And a lot of them got lost in the mail. So they didn't have their documents that they needed. Next up, as mail comes in over the next few months, or you may have already started getting documents. You might be getting your 1098s for your mortgage if you own your home, 1099s for your income, W-2s for your or your spouse's employment if you have it, all sorts of paperwork. Save them in a manila envelope for safekeeping, and also keep that digital copy. And even if you work with the person local to you and you go into their office, give them copies. Don't give them your originals. Anything can happen to them. Store your documents in one place and reference this checklist that we're going to be giving to you. And I think the checklist is really cute. And it'll be sent out with the recording because it's going to list all of these items, tell you what it is. And if it applies to you, you can check the box. And then the date that you get it, you can indicate it. And there's even a place on there for you to write down questions that you need to get addressed. So it's super cool. And you can give that to your tax person so that they'll be able to help you. They will love you for it. But whatever you want to do, whatever you do, if you're working with a professional, do not send them things one at a time. That is how your information gets misplaced. That is how things get duplicated, and it can turn into a mess. So you want to wait until you have everything before you file. And by using this folder system, both a real one and an electronic one, you're more likely to have everything. Does this make sense? I hope it does. Does it? And if you want to make the process even smoother, you can start using a single bank account for all of your business activity. Now, depending on the size of your childcare business, what your income and expenses look like, it might be a little tricky for you to do this, right? But when I say do everything from your business bank account, I mean everything except for your personal expenses. This does not include your rent, the things that you need to run your business. So we start at 6 p.m. Pacific time, Denise. So by everything, when I say pay it from your business account, your business is in your home. So it's okay to pay your rent, your mortgage, your supplies, and anything you need for your company. If you do not have an LLC, it might be difficult to get a bank account in your business's name. And that's fine, because even if the account is in your personal name, if you use one account for business, same thing with credit cards, all your expenses will be in one place. And what this does is it captures it for you so you can make sure you have everything. Most of the providers we work with are really good about turning in all of their 1099s and the cash they receive. They calculate all of their revenue, but somehow they lose sight of the expenses that they pay out. So if you have all of your purchases come out of this company account, when it's time for you to do your taxes, you are less likely to miss anything. Tax professionals are not required to ask for receipts unless we're doing a bookkeeping for you. So this helps you be in position to help them help you best. And if you're not using software to automate this process, or you wait until the end of the year, which I don't recommend, having it all in one bank account will save you from frustration, and it'll save you money because you'll be able to capture these things. And you'll be able to easily categorize where these expenses were spent, what they were for. So this means you won't have to pay someone additional money to do it for you if you've already done it yourself. And they won't take as long to do your taxes because you've already done the legwork. If you didn't do that this year, that is fine. We are
Si
in a
no
new
lo
year.
hicieron
It is
este
a new
año, no hay
day. We are on the
problema, es
first
un
day of the
nuevo
year,
año,
first day of the year. Some
apenas
people
llevamos
start in
13 días en el
even
nuevo
if we
año,
were in
así que
October, you
no
can
se
start at
preocupen, aunque
any time.
estuviéramos en octubre, podrían
So,
comenzar.
does anyone
Ahora,
feel like they could use some
¿alguien se
more
siente
tips
que
to
necesita
prepare?
más
I
consejos
do
para
see your hand
prepararse?
raised, Miss Yolanda.
Veo
I would love
que
to see
Yolanda
kind of
tiene
you
su
put
mano
your question in the
levantada.
chat box.
Por favor, ponga su pregunta en el
Now, for
chat.
our accounting and bookkeeping
Ahora,
clients, we
para
use
nuestros
QuickBooks
clientes
and
a
Xero
quienes les
software,
hacemos contaduría,
but many of our
utilizamos
family providers, and
QuickBooks,
we just do
pero
their
muchos de los
taxes, they do their
proveedores
own bookkeeping, and they use
que operan
KitCare
desde sus casas
software,
familiares
and it gives them really
utilizan
nice
otros softwares porque
reports. I'm going to pause for a
utilizan
second.
este mismo tipo de software. Oops. Oh, I'm really sorry. I didn't realize that I was on the English channel. Let me switch.
And we are going to be right with you. We're resolving a tech issue.
I'm sorry, Miss Shanita. I was actually in the wrong channel. I was in the English channel while you were describing your clients using QuickBooks. Would you mind repeating that? Thanks.
Absolutely, not a problem at all. So I was explaining that for the clients where we do their accounting and bookkeeping, many of them we use QuickBooks Online and Xero software. Xero is spelled Xero. But many of our family providers still do their own bookkeeping, and they use a software called KitCare software. But regardless of which software you use, you'll want to use one that will help you create a profit and loss statement. And the profit and loss statement will help you to reflect your income and expenses by category. And I'll give you an example. This is an old example I used from a training that I took. That's why it says 2020. But you see what I meant when I said break down where you get your income from, and you want to be able to break out what you paid insurance, advertising, and rent. You'll probably see this example again in the next training, but you'll want to be able to give your tax person something like this. Or if you're doing your own, you'll want to be able to start from a point like this so that you have all of your things together. So, again, digitizing and using software to help you, because over the next few months, you're going to start you're going to start receiving all of these documents, and it would be really a misfortune for you to only have your income and not have your expenses. And that will cause you to pay more than you probably should in tax, and we see that a lot. Let's see. Okay, I'm gonna slow my pace down a little bit. I apologize, everyone. So now I understand there's always going to be some expenses that are going to come out of your personal account. And that's either going to be because some company insists that you pay with cash, or it's just easier for you to pay from your personal, or maybe the rest of your family income is larger and the business may not be able to afford to pay everything from the business. But if these things come out of your personal, my recommended way of handling this is to transfer the money from your personal account and into your business account so that you can have that expense come out of the business account. And I'm going to say that again, just in case it was a little bit tricky. If you have expenses coming out of your personal account that you cannot stop coming out of your personal account, consider transferring that money from the personal account into the business account and paying it from the business account. Adela, if you could please post that to the other hosts so they can get that translated for you, I'd be happy to answer that. You might also find it easier for you to use Microsoft Excel or Google Spreadsheet for you to be able to keep your expenses in order, but having them all in that one bank account is going to make it a breeze for you. So when you reimburse yourself from the business, if you pay for something from your personal account, you can always write yourself a check for the exact amount. Maybe you paid from the wrong card. Do the exact amount because you don't want to round it up, because when the IRS sees round numbers, they think the numbers are made up. Now, for the people that are victims of the wildfires, you may not be able to get all of your original documents, and that's okay. There's a provision under the IRS code that allows you to use your best estimate of your numbers, and you can make a declaration that's basically a statement with your return that I'm unable to get all of my exact expenses because of this natural disaster, and I'm using estimates, and you will be okay. And the reason why the IRS accepts this is because when you file your return, they know you're filing as a child care business, and it's based on a code that goes on your Schedule C, or if you file another form, it's a code. So as long as your expenses look in line with other businesses like yours, and you're telling them, I didn't have my original documents, you should be fine in the event that you have to prove it. And again, this is a very simplified, high level view of a profit and loss statement. And it also helps you because you can see all year long how your business is going. You can look and see what your profit is and have an idea if you are on the verge of owing taxes, if you're profitable enough. So I'm curious how many of you already have started to organize your income and expenses. So these are just some graphical illustrations of what I was telling you about handling your personal expenses. You can either transfer funds from your personal account into your business account, and we do have it on Chinese on the next slide. I'll pause there for a second as well. And if you use personal funds by mistake, you can reimburse yourself. Just make sure you keep your receipts to back everything up. And it's important that you keep it all in one place because it's going to make it even easier for you to be able to track it. So this is the best way for you to handle business and personal expenses so that you make sure that you are getting every deduction you're entitled to. So if you are not ready and you don't feel that you will be ready anytime soon, that's okay. I want to tell you some things that you can do right now. So you can reach out to your tax professional and ask them to file an extension for you if you are not in LA County, because LA County has the automatic extension. We are going to file extensions for our LA clients anyway, just to be on the safe side. This is going to relieve you of the pressure of that looming deadline by filing that extension. But please try to file on time, even if you know you have more time. Every year, someone will show up. The deadline day with extension, for example, will be October the 15th, and they'll show up October the 13th. That's probably not enough time to ask questions, review your information. So make sure you give yourself more than enough time. Start going through your personal checking and your credit card accounts. If you have a business partner or a life partner or a spouse, ask them to do the same. And if you need to print the statements out, do it. Get a highlighter and highlight all of the business expenses and income. We used to spread it on the dining room table for our paper folks when we had paper business owners. We would just spread it all out when we first started. Next, go through the receipts that you may have been saving for both the money you brought in from your tuition and for the things that you purchased for your expenses. Since you already have a lot of the purchases you made on your bank and credit card statements, you just need to pull out the things you paid cash for because those things wouldn't be on your bank statement. And we'll go deeper into all of those deductions next webinar when we talk about time-space ratio. And once you have all of your receipts, you'll want to begin adding them into your accounting software or your spreadsheet, whatever you're going to use to tally this all up. Next, you want to take that income and expenses that you've highlighted and go ahead and get them on your spreadsheet if you're using a spreadsheet. I don't recommend doing it by hand because it can be tedious and it can be time consuming and you can lose your place. But if you're doing it electronically, you can walk away, you can come back another day. And that's it. After you compile everything together, it's just 5 simple steps. So, how many of you all think you can do this? Is there anyone here realizing that you might have missed out on expenses before because the expenses might have been in your personal bank account or in your spouse's bank account or it wasn't factored into your records? Kalisha, we do have a template. It's actually part of another a workshop that we do. We do have a template. So if this is substantial, it might be worth it if you missed out to go back and file an amended return. If you are due money because you paid too much or because your refund wasn't as high as it should be, you have up to 3 years to go back and get that refund. If it's longer than 3 years, then the IRS won't release those funds, unfortunately. But you will know for future references what to do. And I want to pause here and give our Chinese friends, speaking friends, an opportunity to take a look at this. And I do want to leave some time for questions, so I won't pause too long. So again, if you missed expenses or you think you might have missed them, or you think you may be on the verge of missing them, start going through those bank statements. Think about those Home Depot credit cards, those Lowe's credit cards, Harbor Freight. These are where we find money that people forget they've spent. Look at your store charge cards. You know how you sign up for a card because they're going to give you a discount, you pay it off and you forget you have it? Double check with your spouse or if you have a business partner, because I know I always catch the spouses, they'll do things for the family business and they don't always ask for their money back and you don't get it claimed. But you can start reimbursing your spouse. So this way it's all in the bank account and it doesn't get forgotten. So now we're going to run through some tax terminology and you will get a recording of this as well. I'm sure many of us have heard tax terms that we are not familiar with. And it's my hope that you've gotten some better clarity on some terms. I don't know if you noticed, but since I began, I started teaching you some common terms by telling you what they mean as we went along. The tax code has 70,000 pages. So there's no wonder why so many people are intimidated by it. But the good news for you is that there are nerds like me, and even bigger nerds, that study the tax code all year long to help simplify it for you. And we are going to simplify some of these terms. Now, of course, we're not going to have them all, but these are the ones that you should know most. Tax return. The tax return is the form you file. If you get the money back, Money back is called a refund, a tax refund, but a tax return is what you file. Tax structure refers to the form that your business files. It could be different from your business's legal structure. An LLC is not a tax structure. Again, please put your comments to Hema and Peggy so we can make sure we get all of your questions. If you are a sole proprietor, that means you file a Schedule C and it gets filed with your personal return. If you are a single member LLC, the only person that owns that LLC, for federal purposes and for California purposes, well, California does have an LLC state return. You are a sole proprietor. If you have an LLC and there are 2 or more owners, you are going to file a federal partnership return by default. So if you have a partnership or if you have a multiple member LLC and your tax person keeps talking about partnership return, that is why, because the federal government does not have an LLC return. S corporation. In order to file as an S corporation, you must receive approval from the IRS. You'll get it in writing. You'll usually file a form 2553 to do that. Lately, we've been seeing a lot of people think they're S corporations because they decided to file as an S corporation. That's not how it works. And this S corporation must be filed before you file your personal return. Because with the S corporation and the partnership, the multi-member LLC, you're going to get a K-1 form, and this must be filed with your personal return. So you cannot do your personal return before you do your business return. Or you may end up having to amend your personal return, which will cost you money. Corporations. Corporations file a form 1120, and corporate returns are due on April 15th, usually, and they get extended to be due on October 15th. Now, corporations are just like people. Corporations can get refunds. Corporations can owe taxes. And a really nice thing that happened in 2018 was that corporations developed a 21% tax rate. So if you are a higher income person or your family puts you in a higher income, that corporate tax structure starts to look attractive. I've only personally suggested that people become corporations about 5 times in my career and doing taxes since I was 11. And out of those 5 times, 3 times has been since 2018 after the tax code changed. Some more terms, deductions. Remember, deductions reduce the amount of income that you're going to pay tax on, and it's not dollar for dollar. Credits do go against the tax you owe dollar for dollar. Some credits are refundable, some aren't. We're going to talk about depreciation in the next section. And depreciation is another term that confuses most people. And depreciation is simply a way you receive a tax deduction for the wear and tear of assets you use in your business and for your home used in your business if you own your home. Taxable income. I've talked a lot about taxable income, but I didn't really define it. Taxable income is what the IRS will make you pay tax on. It is what's left over after you look at all of the revenue you've earned minus all of your business expenses. What's left over is our taxable income. And that's why I put so much emphasis on making sure you capture all of these expenses. Self-employment tax. Self-employment tax is a tax that covers Social Security and Medicare contributions for self-employed individuals. It's critical to budget for this when you're running your own business because you pay self-employment tax in addition to income tax. So as a self-employed person, you're paying income tax and you're paying self-employment tax. Don't believe me? Please challenge me. Look at your last filed tax return and bring your questions to the office hours that we're going to have. So I began preparing taxes when I was 11 years old. My daddy was the tax man and I was his apprentice. I do his taxes today. And I'm going to tell you some things that you can do. And we've gone over a lot of these things to help you do it more easily and effectively. Track your expenses, whether you want to use a spreadsheet, QuickBooks, they have Wave, they have Kid Care. I hear Brightwell is coming out with software now. Keep your books clean, meaning you want to regularly update them. You want to at least once a month put on your CEO hat, that's what I call it, and take a look at your financials, at your numbers to make sure you're not missing anything. As best as you can, separate your business and personal finances and automate whenever possible. Schedule regular check-ins if you have a partner or a spouse that is a part of your finances, and leverage professional help. Even if you do your own bookkeeping, do your own taxes. I'm an accountant, and every other year I get a colleague or someone on my team to look at my stuff to just have another set of eyes. So, how many of you think you might have been making some mistakes? I saw that we have some first year providers here. I'm going to clap it up and celebrate you because you are embarking on such important work and you are here getting this in your first year. And I think some of the people that have been a little bit more seasoned can probably tell you that they wish they had gotten here sooner. So kudos to you for being here on your evening. And everyone else, whether you've been in business for 4 months or 40 years, I hope these strategies will help for you as well, because we're going to quickly talk about some common mistakes to avoid. And I've been alluding to a lot of them all along. The biggest mistake that people make is mixing these business and personal expenses together because they lose visibility of their business's expenses. And keeping them together is not organized. So it makes it take longer for them to do it. And then they miss deadlines and get those penalties. And they fail to track them all. So they file with what they have. And they don't have the receipts or documentation. So we want to avoid these things. And I see so many childcare owner tax returns that are not taking advantage of the time-space ratio. What I see happening is people using the simplified method of business use of home. And that's for other businesses, like the business that I have in my home, because I use one floor, but it's not for a childcare, because in a childcare, I have some providers that use like 90% of their entire home. And I'll tell you how to do that too, how to legitimately increase your time space ratio to increase your deductions. Something else we see people make a mistake on, they forget about self-employment tax and they're just thinking about the income tax and they don't seek professional help. Maybe they'll get a letter in the mail and they'll try to represent themselves and get tricked by auditors, or sometimes they don't know what they don't know. And it's not just childcare providers. A lot of our clients' spouses own other businesses, and we see it there as well. But by learning from these mistakes and taking proactive steps to avoid them, you will not only save money, but you'll also reduce stress during this tax season and those to come. And these tips will help you to stay organized, compliant, and it'll give you confidence. So I usually ask if anyone here has made any of these mistakes, but you don't have to tell me. You all have been an absolutely amazing audience. I've enjoyed my time with you. My thoughts and prayers are with you and your neighbors and your families. I've answered some of the questions as they came in, but we do still have some time for questions. I'm not sure how it's going to be handled. And there is going to be an office hour session on January 22nd at 9 p.m. So if your question doesn't get answered tonight, then that's another opportunity as well. So, should I just take some more questions? How do you want me to do it?
Shanita, we can continue. They can continue asking questions to Peggy and Hema, and they will go ahead and put them on the document. So you only have to focus on one thing.
Okay. Praise God. Okay. So
And
someone said
I just wanted to correct that the office hours, it's 6 p.m. your time, but it's 9 p.m. your time, but it's 6 p.m. our time. So it'll be 1 hour on the 22nd from 6 p.m. to 7 p.m. Thank
thank
you.
you. I translated it in my head. I'm sorry. Oh. So, someone said they can't keep up with all of their receipts. So, most of us have one of these, a smartphone. Take pictures of them. You can take pictures of your receipts and then you can upload them into the cloud. Another thing you can do, I told you about uh the Ziploc bag method. If you put those receipts in a Ziploc bag and then every other week or once a week or once a month, you can put them on copy paper and then you can scan them in. That should help. And by making all of your purchases in that dedicated account, that's going to help make sure that you keep up with all of those receipts. We are, someone asks, are we available for tax preparation? Yes, we are. We usually have people schedule a quick 15-minute call with our team just to make sure you understand everything. For time space percentage, how much needs to be in that room, for example. Okay. This is going into next week, but I don't mind answering it because we're going to talk about it again. If you're using a room in your house for storage, that qualifies as time space. Self-employment tax is another question. When you work a job for an employer, they take the taxes out of your paycheck, right? Some of those taxes are your federal income tax, some are your state income tax. Some are Social Security and Medicare. But when you work for yourself, you're self-employed, no one's taking that tax out for you. So now the government says you, business owner, are responsible for paying me my self-employment tax. So that's what self-employment tax is. So if you have an employee, whether it's a child or an adult, you usually should have them on payroll where taxes come out. State taxes will still come out for this child, and they would get a W-2. Now, if your business is not a corporation and your child is a minor, you don't have to pay that self-employment tax on that child. So that's why you'll see, and I think on my YouTube channel, the child care CPA, I think I have a video about that on there as well. Someone asked if we use debit cards, is that considered cash? Sort of, yes. For business expenses, it's considered cash, but that debit card, when you do that transaction, it's still going to show up on your bank statement. But in accounting world, debit cards we consider to be cash. A good tax software for childcare providers, we use professional tax software. So I'm not really sure what childcare providers do for tax because we do teach bookkeeping, but we don't teach tax preparation just because there's so many laws involved in it. In tax preparation, there's so many things to consider. Oh, Kalisha is dropping some good questions, but she's sending them directly to me. Cash app fees, any fees that you pay to do business, and this goes to the union fees question I saw as well. It is a business expense. Any fees. So if you were paid a gross amount, but you don't receive that gross amount because it was deducted before you got it, That is a business expense. Our YouTube channel, the link is the name of it is just the Child Care CPA. What is a retirement fund? A retirement fund, there's many types, but it's basically money that you are setting aside for your older age when you stop working. So without knowing all of the details of your financials, I can't really say which one is best for you, but you can talk to your financial advisor, maybe at your bank, ask them about just ask them about a self-employed retirement plan, and then they'll ask you a series of questions to help you determine which one is best for you. My son helped me bring the car to change tires, and he used his credit card to pay. I can use these expenses for deduction? If so, how do I deduct? Yes, you can. You can reimburse your son. If he paid $48.32, write him a check for $48.32. Or if you want to Zelle it, just make sure you keep the receipt that he paid. And the same thing if you have an employee that maybe purchases things for the daycare and you give them their money back. Here's a good one. Y'all are dipping into the next lessons, but it's okay. Is clothes to work with children and shoes a deductible? How about if a person does your yard, they don't file taxes? How can I claim that? Okay. So, clothes. Your regular clothes are not deductible. So if you have on an outfit and you could wear that outfit somewhere else, it's not deductible. But now if you put a logo on it from your business, now suddenly it becomes marketing, it becomes branding, and it could become deductible. But if you're using scrubs, that's like a uniform. And if you're using, I forget the name of the shoes, like the clog type shoes, and you're only using it for work, then yes. But if you're wearing a nice pair of slacks and a blouse or a skirt and shoes, that's not deductible. The yard work guy, he always comes up. If you have a contractor, that's someone that is working for you and they are not an employee and they are not on payroll, you should be collecting a W-9 from them before you ever pay them a dime. So that when tax season comes, if you pay them $600 or more, you can 1099 them. Now, if you don't want to 1099 them, pay them with a credit card because credit card merchants will issue a 1099-K and then they'll have to deal with the credit card company and you won't have to deal with it. Evangelina, I'm sorry, I don't understand your question. I see that you're asking about help with a corporation, but that's as best as my Spanish can get me. Can you please send it to Hema? Let's see. What percentage should we save for taxes? Oh, I get this all the time. The answer is it depends. So, and the reason why it depends is because everyone is in a different tax bracket. Remember when we talked about the standard deductions, what you get, and we talked about business deductions and taxable income? So everyone's tax rate is different. But if you want to get an idea, if your business stayed the same between last year and this year, then you should roughly expect to pay the same amount. And that'll give you an idea. I don't like throwing out that general percentage because it's usually not accurate, but a lot of people will tell you 30%. Sometimes I find 30% is too high, and that's money that you could have used in your family all year. So we actually meet with most of our clients quarterly and we see what their profit is, and then we look at their whole situation and tell them, up until this point, this is what you owe. Someone asked, how many years can I go back in terms of deductions for things I bought from my daycare? So if you do a refund, the IRS will give you a refund for up to 3 years if you're going back. But anything beyond 3 years, they won't refund it. Another question. I have all of my subsidy income going to my personal account, and it helps pay the house payment and a few other business costs. Can I just keep it there? I write down my receipts and income on a spreadsheet. Does that make sense? Yes, you can do that as long as it's working for you. So I don't want to add any additional complexity to anyone, but if you were working with us, we would almost twist your arm to convince you to have all of that go into a business account. And or sometimes we've had people create a new personal account since all of this stuff was in one and then break things out that way. But if it's working for you and you aren't having any issues, as long as you're not missing your deductions or underreporting income, then you should be okay. If you have a business account and go to Walmart, how do you separate paying for food, personal items, and household items? That's the first part of the question. So I'm going to ask y'all to be that lady. If you have things that are exclusively for the daycare, I encourage you to make two purchases. I tell our clients to get a Sharpie marker and write a B on a business card for business and a P on a personal card for personal, and just do two transactions. I represented a lady in an IRS audit once, and the IRS was throwing out all of her expenses because they said her grocery expenses were too high. And they asked her, "Where's your expenses for your personal groceries?" And she didn't have it because she didn't know what was what. And the auditor wanted to disallow all of her grocery expenses because she couldn't show him where she had personal groceries and where she had business groceries. That was really petty. So we ended up doing all these kind of calculations, and she didn't, it was just her and her husband. So it was no way all of that food was feeding those two people. And she had a 3-shift childcare center. She was licensed for 16 kids. So we were able to get it. We were able to get most of her expenses re-included. So I would say if you're going to a store, if some things are just for the daycare, do the two transactions to make it cleaner for yourself. And then the second part of this person's question was, does mortgage insurance get paid through the business? I would pay it through the business just to keep it all in one place. Of course, you're only going to get a percentage of it, but I see a lot of people miss out on their utility expenses because one month they'll pay it from the business, the next month they'll pay it from their personal, and then they'll go back and forth. And when December comes and they add up all of their utility bills, they don't have 12 months of utility bills. Is my pace okay in answering the questions? Am I speaking too quickly? I'm probably one of the few people that get excited about talking about taxes. So, someone else asks, how long should we keep receipts? I say 7 years. Some of my mentors say indefinitely. Now I keep them forever because they're digitized. So, as long as the cloud is still storing them, I'm keeping them. Do you recommend paying with credit cards? I do actually, because credit cards, you can get points, and points allow you to do things like get free trips and go to business conferences and go on personal vacations and things like that. So for our business, we do all of our expenses on business credit cards. At what age can you transfer your own children on payroll? I say when a child is actually old enough to do a job that you're able to document and pay them to be on payroll, and it makes sense and you can defend it. I'm not sure about the liquid CD question. Maybe somebody was asking about investments. I'm not really sure what that question was. Um, if you have someone working just 8 hours a week, do I still need to put them on payroll? You can go on the IRS website and they have a test, the employee versus contractor test. Go through those questions. It's an interactive thing where you just say yes or no. And then you can tell yourself if this person is an employee, I'm willing to bet that person is an employee. And if so, Even if it is just 8 hours, they should be on payroll. And if they should be on payroll, make sure you're adhering to the minimum wage laws. I know California has some of the stiffest laws, so make sure you're adhering to all of that. I want to know, if I open a business account, do I need to pay the power bill? How do I do the payment? Do I pay the whole amount with the business account or just some? That is a great question. Go ahead and pay the whole bill, because when we talk about the time space ratio, oh, I'm so glad you asked that question. When you're doing your time space ratio, you need to put 100% of your expenses in. The ratio will actually do the calculation. So unless you're doing, even if you're doing your return by hand, which please don't do that, use software. If you're doing your own return, you don't want to do the calculation. If you're going to a tax professional, if you're working with us, don't do the math for us. As the tax professionals, that's our job, because we actually ask you a bunch of questions about your time and your space. And then whatever that percentage is, we do the math. So if you've already reduced your expenses by that amount, we're going to go in and reduce them again, and you're not going to get all of the deductions you're entitled to. I'm not sure I understand. If you can, please make sure the questions are, well, I think I understand it. I'll come back to that one. Okay. If you have a loss in your business, does that mean you don't pay Social Security, Medicare, or self-employment? Is that only if you have a profit? California, y'all are asking some good questions. Yes, that is what that means. If your business has a loss, there's no tax to be paid, including self-employment tax. So that means you're not paying anything in. Can you enter purchases from Mexico? Yes. If you decide to purchase from Mexico or some other country, if you've purchased it for your business, you absolutely can deduct it, even if it's from Mexico, Canada, doesn't matter. How much can you deduct? Y'all not gonna like the answer to this question. How much can you deduct for student staff gifts for birthday and Christmas? Now, the IRS says we can do $25 per year for a gift. But the IRS also says that we can give our employees fringe benefits. So I would say as long as it's under $100, you should be okay. That is a Shanita rule. That is not an IRS rule. A fringe benefit is a minimal gift that you're giving them. I got new floors for my house and the door and the kitchen and I got new floors for my house and the door and kitchen, and my personal income can cover my taxes. I think what the person is asking me is if they can deduct that new door and kitchen. And the answer is kind of. If you make improvements to your home and you own your home, it gets added to the value of your home. And once it gets added to the value of your home, it's going to be depreciated. Now, we're going to talk about most of this again next week, but it's good because it'll be reinforcement. Someone asked, do you have to report a high yield account? Yes. You will receive a 1099 INT for the interest you earn on that account. And good for you putting that money in a place where it's working for you. If we need to purchase new insurance for the pool under a new law, do we need something specific? I'm not sure if that is a tax question, but if it's insurance, it would be deducted like insurance would. I do want to ask the training fund if there's any questions that they would like me to advance in the remaining time that we have.
You're actually doing great. We have about 6 minutes left. And before we close, we're going to drop an evaluation into the chat. And we would like all participants to just take a quick second or two and fill out the evaluation. This gives the training fund feedback on whether we are providing training and the training that you all want. So please take some time and fill out the questionnaire in the chat. Thank you very much.
Thank you. You all are asking some of the best questions that I have ever seen, and I do webinars like this all the time.
Shanita, I
Um,
didn't tell you that California, we're amazing. You didn't know that?
no, I knew you guys were amazing, but these questions are like really, really, really good. Um, okay, I answered that one. As a proprietor, oh, this is a good one. Is it okay to write yourself? Is it okay to write yourself a check every month? So, if you are a sole proprietor, you can absolutely write yourself a check. I want you to write yourself a check, but that check is not a business expense. That check, because as a sole proprietor, you don't belong on payroll, even though I know some people like to. The training fund has my contact information. They'll share it with you. And our website is thechildcarecpa.com. Let's see. Is your model for a side job? Oh, we have a model. If you're a model for a side job, you will be able to claim purchase clothes right. That depends. So there's a whole separate area of tax code that gets into entertainers and performers and what they can do. And that's something that you'll definitely want to talk over with somebody that's intimately aware of what's going on with you. We would have to ask specific questions. So I don't want to give you the wrong thing, but I will say in a lot of cases it is deductible. What if I buy a car and I'm paying it in payments? Can I claim it? Yes, you can. And we're going to talk about those type of deductions next week. And if it's going to make more sense, how it's going to make sense for you to claim it. So if you are buying a car for the business, or even if you buying your own car and you use your own car for business, there are deductions that you can get. By the way, ladies and gentlemen, get your oil changed if it's that time or even if it isn't, because that'll track your odometer reading and that comes in handy for tax purposes. Someone asks if they should be on payroll. Only if you are an S corporation or a C corporation. Can I deduct if I use 80% of the house for the daycare? You most absolutely can. If you are renting your house, you get to deduct 80% of that rent in your situation. If you own your home, I think we actually going to answer all y'all questions. Oh no, it's another page. If you own your house, you will get to deduct that percentage of property tax, mortgage interest, and a percentage of depreciation. And is it better to pay with your business or personal? We talked a lot about that. It's going to be basically based on what's best for you. Either way, just be consistent so you can make sure you gather all of those expenses when it's time. And if you don't have your receipts, definitely in light of the fires, you can use your bank statements. A lot of auditors will fight you on it and they'll say, well, you could have bought anything from Walmart. You could have bought anything from Amazon. But I know that there'll be a lot of grace and leniency showed for those affected by the wildfires. Why is it so hard to purchase a car under your business account? Risk. Banks want to avoid risk and they want to make sure that they can go after someone. It is difficult, but it's possible. They'll often ask for a couple of years of tax returns and threaten to walk out and go to someplace else that's more friendly with self-employed people. And they often change their tune. No matter how bad you want the car, when you threaten to take your money elsewhere, and that goes for those mortgage brokers too. There is no average percent that's deductible for people's homes. It's really just based on what they do. Like I said, I've seen people use 100% and I've seen people say they only use 10%. So it really depends on what you're doing in your business. So, again, you all have been phenomenal. I absolutely enjoyed your questions. And some of these questions that are also so good, I'll probably record videos and put them on the Child Care CPA YouTube channel and answer them like that since they'll be quicker. And I'll also be at the office hours session and we'll be able to continue there as well. So I'll hand it back over to Stacy. Thank you all again for having me. And I'm going to be quiet for now.
Thank you so much, Shanita. Thank you for sharing such helpful information to all of us. Y'all, it is midnight where Shanita is, so thank you for staying up, Shanita. We really, really enjoyed your webinar. Be on the lookout, educators, for an email on our office hours. We have to cap our office hours. We can't have over 800 people on it, so the first 40 people to sign up will be able to attend our office hours. We will be blessed with Shanita again for an hour. She will be answering any more questions that you may have. So that will be on the 22nd. An email from our communications department will be going out, and the office hours will be from 6 to 7. The second part of our series will be on January 27th. It is not this coming Monday because that is a holiday. It is the Monday after. And that will also go until 9 o'clock. As you can see, this is a very popular topic. So we do go all the way until 9. All right. So please take the time to fill out the survey. And after that, please have a great evening. Everyone, please be safe. Take care of yourselves and your family. And we bid you all a good night. Bye, Shanita. Thank you.